Good afternoon, everyone. BC Ridgefield here, coming to you live from London. It's just gone a couple of minutes past midday, making it just gone 1100 UTC. Big shout out to everybody joining the stream live today, as well as everybody that is watching it on catch up. Nipah, Shib City. Hello, mate. I have not forgotten already, Shib City. We wanted to look today at XRP, I believe, was one on the cards. Obviously, going to take a look at ETH. I think it makes sense to take a look at where we are with Bitcoin as well. But it is Alt Request Wednesday, so please do let me know if you've got anything else that you'd like me to take a look at. And we will rock and roll. So, going to start here with Bitcoin. And let's just zoom out a minute. There's a lot of kind of emotion and thought in the market at the moment, which is fine and it's natural, especially at this phase of the cycle. But look, it's two things are really important to remember, or certainly I'm always reminding myself of this, right? Which is, first of all, when you're looking at these higher time frames, the higher time frames for me are the ultimate context. Okay, this is the level that major players, investors, institutional investors are really going to be looking at weekly, mostly probably daily as well. But obviously, you're looking at these things as much of a longer term asset and hold, right? So in terms of how I look at the market, and I'm looking at the market in terms of liquidity, if I'm looking at this as a weekly trader, then at the moment, this still looks healthy, right? Yes, we got this level at 69K. We closed back above it. We're now back below it at the moment, but we still have a long way to go for the weekly close. Do I think that there's a further correction incoming? There absolutely could be, right? So if we remember discussing this before, and we were looking for this retrace to 50%, we came very, very close here. I'll pop these on so you guys can see it. Right, we did come very, very close here from this last impulse move higher, right? We came back down. Look, we were short the market when we got back below this level. We were targeting this fair value gap, which we got. We saw the strong reaction at the fair value gap, and then we were looking for higher prices. Now, at the moment, for me on a weekly scale, this is still bullish, but we do need to remember that this could very well, we've set the high here, higher low. If we do break down from here, this ends up being the lower high, and we would need to see a lower low. Now, obviously, it's all about context, right? Because by the time we get down to here, and I know there's people on Twitter calling out for, 40, 42, 40K, etc. I'm not going to say anything against those people. I think everybody has their right. Everybody has their own strategies and systems at the end of the day. So look, everybody's entitled to their opinion. For me, I look at this much more on a short-term basis, right? But if I'm looking at this long-term, then technically this is the level. This swing low here at 56,697 flat that would need to be broken in terms of looking at a shift in market structure, right? But even more so than that, and there's two areas here that are really key for me. One being this very, very skinny, but nonetheless an important gap, okay? I think if we see price close below this, then I think, it's probably nailed on that we're going to be searching liquidity below here, right? Now, if we hold that, however, and remember, we could get an absolute monster wick down into this. Look at this, for example, the wicks on these. You get a huge wick down, the body could respect this, and then I would still favor more upside. So that's what I'm looking at the moment. Obviously, there's this one here. I think by the time we get down to this one here, we're already in the vicinity of the prior swing low, which could very, very easily lead to a reversal, right? So that's my thinking on a weekly scale, right? I can't be overly bearish at the moment because on a weekly chart, it just really isn't bearish, right? Now, the reason that I've got these highlighted here is because these for me are key liquidity, right? We've got these untapped swing highs here as well. We did sweep through this one here, which caused this current rejection, but actually, price for me here has been really, really clean to read, okay? So you can look back through my Twitter feed. If you remember with us over at the Bird Nest, you can go and look at all the charts. You can go and look at the Bitcoin reports, our trading sessions. Very, very simply, when we inverted this bullish gap here, we left this bearish gap here. I'm only looking for shorts from these gaps until we close above them, right? So now I know we need to wait for the day to close here, but what have we done here, right? We came up and we took external liquidity, right? So we swept these highs. We were talking about that for a while. We saw a good move through this one here, but we're always expecting for external liquidity to be hit, which was here. Now, when that's here, we're looking for price to correct down to an inefficiency, to a fair value gap, right? Or at least to an order block. So this was the kind of first real area it could come down to below this. This was very close, but we saw an initial support here. When price closed below this though, the expectation then is that price isn't content with finding internal liquidity, it needs to run external liquidity, which is what we saw here. Obviously, we also had this low down here, right? So we've taken liquidity below those. The next possible point to the downside would be this, right? And we're obviously going to look at this on this is from our weekly, okay? So this then aligns and says, okay, well, maybe price is drawing back down to this weekly gap. Yeah, we've got this order block here as well. This order block, which we can see actually, if we draw this across as a line to show the significance of this. And I'm just drawing this to show the top line of the two down close candles that led to this large expansion in its wake, leaving a fair value gap which supported price that allowed it to come and take this previous high. We found support here once, twice, 3 times. Now we found support again. So from this perspective, I would always expect a bounce here. It doesn't mean that we're going to go back to the moon, but it does mean that there's a lot of liquidity resting below these lows. So it makes sense for price to have some kind of reaction there. It's a sensible place for people to sell their positions, to take some profit and to cover. So what does that mean for now? Well, on a daily scale, sorry, at the close of today, should we leave price action anything similar to as it stands, we would be leaving this gap. The fact that we've taken external liquidity and reacted at this order block, I would be expecting price to draw higher towards this region, to this inefficiency. Now, until that's confirmed, however, we don't have that in play. What we do have is this inverted fair value gap here. And we also have this price swing low here, which sits right atop it. Now, for me, they're really key areas of interest if price comes to revisit these, right? So we've had this strong close below. I think price is getting drawn back towards these liquidity pools here at the moment. Obviously, we can see there was some nice buying pressure stepping in here. Now, just really important to remember. Hey, Raphael. Hey, Simon. Erica as well. Good to see you guys. Got a B&B written down for you already. It's important to remember here that, you know, we're bearish on a daily scale. We've taken the low. We've set a lower high, lower low. We've swept this low. We've had big displacement through it. So I would need to see this invalidated first and foremost to expect there to be any price action higher, and that would mean a close above. But then we need to deal with this as well, right? You know, we need this to be inverted. So the conditions for this really are getting back up and closing in and around the the 70 to mid 70K region, in which case then I think we can start to build some structure to the upside. Now, I've been receiving a lot of messages. There's a lot of chat and bits and pieces going on, and people asking me my opinions on the whole, you know, Captain Cole thing and bits and pieces like that. Look, I'm really, really simple when it comes to trading. There's traders out there that I respect, and I think that he's done more than enough in the space to earn people's respect, as have people like SZ and numerous others. Then I leave their strategies up to them, right? He's obviously made an incredibly good call at the top. We've been short from higher up as well. That's not to try and claim any clout. It's just to say that you can have differences of opinion. We came in for a lot of criticism when we did it because it's a very emotional market. Now, something I think is important to remember is that no one's right all the time, right? Let people have their moments when they are. People come in for a lot of criticism when they're not. What I would say is the reason that I've been more skeptical than most is purely because I'm just not convinced that institutions would necessarily be buying at this level, okay? Not when we've seen such strong equity markets. You know, we've got inflation coming down, interest rates being cut in Europe. You know, obviously we have the Fed rate coming in today, which is going to be super, super important. That's going to set a really big tone. So, yeah, I think for me, if, you know, the Fed come out today, if we get the FOMC and they come out and they cut rates, for example, then I think this thing could just explode along with other risk assets. If it doesn't, it's really, really telling. It means that the big players haven't stepped in yet, or they're not willing to step in yet, in which case we're probably going down a little bit lower. Need to remember a lot of these big players, a lot of this kind of smart money and that weren't waiting for the ETF to be approved to buy. People were buying like down here, right? And people were buying in here and leading to these big expansions and not having to panic when things start to come down. Then the markets get compressed, people start to get bearish, generates a lot of liquidity, and then the markets pump again, okay? Typically the nature of how they work. Now, just to give this a little bit more granularity, because we're obviously not getting that off the daily until we set that new block, until we set that new gap, sorry, you can see the speed of this move to the downside. Big drop here. We had this consolidation, like we said, till we get back above this level. This was is also a 4-hour gap, which we were looking to be short from. Now we've wiped out liquidity below these lows, we've got our daily low sat here as well, and this weekly fair value gap. Well, what I'm kind of got my eyes on at the moment is looking from this move down and saying, okay, price is approaching this kind of 50% level. What have we got here? We've got the inversion fair value gap here that we expect to offer resistance. We've got this swing low, which aligns right across the top. We displaced aggressively below that. Often these areas provide good points of support and resistance, okay? So now we've kind of ripped below that. Quite simply, while we're in a bearish state of delivery, I'm looking at the gaps that are above us. So we have this, we'll mark this on the 4 hour. Now, if price is looking for more downside, then it's looking to dive deeper into this high time frame order block, which we draw on the daily. We can see that this, as well as this swing low here, are looking like a draw, all right? So while at the same time, yes, we've inverted this first fair value gap here. If we close this 4 hour candle above, we are currently in the region of this, right? Meaning that we are within the realms of this 4 hour fair value gap. We have a small volume imbalance here as well that's sat across here. So as long as we hold this, then basically I'm looking to remain bearish, all right? If we close above this and we've got these clear targets above, I would consider some intraday scalps up to these kind of key high time frame levels. But it's important to remember, you know, aligned with our trend, what we're looking for. Now, we've looked at a weekly, a daily, and a 4 hour chart. You have to ask yourself, which is your high time frame? Which of them are you looking to, you know, looking as your framing time frame if you use a triple screen system? And what time frame are you looking to execute on? Okay. So, for example, as we look at this on the 4 hour and we drop ourselves, say, to a 15-minute here, then it's important to remember that this is a 4 hour fair value gap. So you need a 4 hour close above it to invalidate it. While we remain within it, and price can close above it on a 15-minute scale, as long as it's not on a 4 hour scale, then what I'd be looking for here is if I want to get short, I want something to align on the 15-minute as well. Yeah. So I'd like to see price, say, run this high. Now we are in the realms, right, of this. So we had this, you know, up close candle before price really started to sell off. So this would be an area of mitigation to consider, as in we would expect this area here, this consolidation in the form of this up close candle, to form resistance, which it currently is, right? Now, price starts getting above this, like we said, and we've got this draw higher, then that's something to consider. Now, we obviously need to factor in the news today. We need to remember that we've got core CPI month on month and year on year today, which is coming up in about an hour and 15 minutes from now. And then, you know, later on today, we have the federal fund rate decision, and then we have the projections and the statement, obviously followed by the press conference. And when Powell takes the mic, you know, if they decide to keep rates the same, which is what the market looks to have priced in, then that shouldn't really be bearish for the market. It's not necessarily overly bullish either. So we could see a reaction either way. Typically on these big news decisions, you see liquidity get run both sides of the market and then price settles. The difficulty on a data like today is you get that move for CPI, then you're driving through into the FOM's C decision later on in the day as well, obviously sparking a lot of volatility. So with that in mind, just to keep people aware, it does make it a really, really tricky day to trade. However, if we're looking on here and we're waiting to see the price action, then basically for me, I need to see this engaging with something bearish on the 15-minute as well, in which case we could expect price to have this minor correction down lower. If obviously we are on the wrong side of this and we get that 4 hour close above, then we can look for intraday longs back up into this area. But apart from that, I would not be looking to enter any kind of swing or position trades at the moment. I would definitely want to see the news drop. So with that in mind, let's take a look at some alt charts, shall we? I mean, I know we're going to see a lot of blood in the water, but my dear friend Shiv City has been waiting quite a while here to see XRP. So let's not keep him waiting any longer. Let's get a nice fresh chart up here and see what we've got. So on a weekly scale here, this actually looks pretty clean. We've taken some weekly lows down here. When we see these on the daily, you'll notice how they kind of present themselves as a really nice liquidity pool. Hey, no worries, Nick. No worries, bud. Remember, we've got live trading coming up later as well if you're around. And we have this weekly fair value gap, right? Look how well this has been rejecting price. Again, shows why it's important to wait for the close for these. You know, you can wick up above it, but look, rejection, 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 price just kind of getting driven lower. The last kind of key low that we've taken, or the last swing low that we've taken, is here. And until this weekly close happens, this won't be confirmed. So the one below is all the way down here at like 0.3998, okay? So that's really, really interesting. Again, look at the wick there, right? That's a really, really big, long wick. So price ran down here, cleared out all this liquidity below these lows, and then got bought back up. Unfortunately for the XRP holders and people in the community or people that are overly bullish, this didn't break, right? So this at the moment is still what's kind of capping the market. If we look at this on a daily, this is where these lows start to become a lot more prominent, right? And look at them. You know, 1, 2, 3, 4 that we had here, and look at this move, the way it's run, all of that liquidity, gobbled that all up, and then it's got bought right back up. Okay, so that was an aggressive move to the downside. Now, and I think we're going to see this on a lot of charts, right? Quite simply, we had this gap, very, very similar to what we've seen on Bitcoin. This was formed here when this closed, and then price got up and just snuck into this area here, and now it's kind of selling off again. Now, aligning the same principles, obviously, until the daily candle closes, that this swing low here, if it does close like this, won't be confirmed, and neither will this gap here. All right, remember, we need the daily close to confirm these, because this candle could close all the way through this, invalidating this, or it could close lower, meaning that we don't confirm this as a swing low. So this, in terms of the daily target to the downside, should we reject from this area, remembering we've got this order block here as well. And again, you know, if you're looking at these kind of points of liquidity here, we've displaced below this low. This could very well look to be a point that price comes back to retest also. So let's just pull this back for a moment. But please do remember, until this daily closes, that isn't valid. So while we're below this, we have to remain bearish. Why? Because we're in a bearish structure. We're setting lower highs and lower lows. This here, I think, is a reaction from the fact we've swept all this liquidity resting along here. So we really need to see how price settles. So looking at this now on a 4-hour, and Simon says usually XRP pumps before BTC correction. Let's see if that plays out this time. So looking at this, if we're going to see some kind of 50% retracement here, then we've got this fair value gap up here that I really like. You know, there's always a danger in, and let me just draw this in so you guys can see it. There's always a danger in just kind of shorting from here, right? And what I mean by that is, you know, obviously people are really bearish now as well. There's a lot of kind of negative sentiment working its way into the market. Although a story that I shared with our trading club recently was one of an old school, you know, pit trader back in the day when we obviously used to have the proper pits that would just scream to everyone, why are you buying when the market is green? You should be buying when the market is red, right? Now, kind of aligned to the whole buy the dip. Obviously, there's a lot of context that goes behind that. So I'm not just encouraging you to buy when there's blood in the water, but you will notice when you have these sell-offs of any kind of nature, even like this one, by the time most people start to get into this, to short it, and often that's with leverage, right? Then that's when you get these corrective moves to take these people out, all right? So from here, as mad as it sounds, I'd actually be looking for price to kind of draw back towards this FVG here, and the low of that is about 0.4887. How that would look, for example, is you want to wait. Now, obviously, I like trading between these sessions. So if I was in London this morning, then quite simply, it's as easy as this, or not as easy, certainly not trying to make this out like it's easy, but I'm looking for the bullish gaps. If I want to be bullish because I believe that the draw is higher, one of two things will happen. If I get the bullish gap retracement, and if you take the move here, high to low, yeah, it's this high to this, so you can see it came down to our 50%, meaning that we're down in discount. All right, that's rewarding buyers from a risk to reward perspective and punishing shorters. So while we hold this, I'm looking for upside, right? Close below this, I'm looking for downside, in which case I would then move to a lower time frame, right? And in here, I would look for a move like this, when there's a low set, that low is swept, the high that swept the low, yeah, is closed this high here. All right, and you can even just use that area to find your entries, because you've got a great point of invalidation, right? When you get that close above, you want to see a strong move. You can put your limit order on there, your stop loss just a couple of points below that. And then, you're targeting, for example, up here, the fair value gap, or you're looking for things like this, equal highs, which are really, really strong draw on liquidity, just to give you some context, all right? Just to keep it nice and simple. So that is the kind of thing I'd be looking for on XRP. Obviously, while we look for this to hold, if we move back and we confirm our 15-minute, then we're saying, okay, well, what if price doesn't want to go up there? Or what if price is bearish? Or what if the news really flips price around? Well, quite simply, we've got this here. Yeah, this has supported price once. The expectation is for it to do it again. If we close below this, then we have these lows down here that are starting to form, right? And these lows are providing attractive prospects in terms of liquidity, all right? So you can see price run these lows. Sometimes before a big correction, you look for that V-shaped correction, or ultimately it might just be looking for a leg down, in which case we've got our targets from the higher time frame. So we're going to just jump over now on to BNB for our friend Erica. Let's have a look at this. Actually, I think if we look at the perpetual pair, here we go. Right. So what we were discussing this recently, I think it was on Monday, right? And we've been covering this for a little while in terms of liquidity resting above here. Yeah. And we can see now that that's all been run. We had all these flat highs out here. That one was a failure swing on that, which was a failure swing on that. That's all been swept. These down here now become the key point for liquidity. If prices rip liquidity from one side of the market, the chances are it wants to head to the other side of the market to find more liquidity. Oh, excuse me, drinking some tea, got a bit of a dry throat today. So we'll look at this on a lower time frame, but on a daily, this, as we were saying, when price ran up this, we're looking for price to correct down here around about to the equilibrium. If we start violating that, and the fact that we've got this low within a fair value gap, making it an intermediate term low for anybody that has studied or come across ICT principles, it's just simply, if we look at it as a low or a high that's within a fair value gap, it should be a really good liquidity pool, right? So now we've closed below this. What were we saying? Well, we've always retained the same bias here, and that is if internal liquidity fails, the chances are that price is looking for external liquidity, right? That's in the form of this being the last swing low. Now, we had a slight complication here that we've got this gap, right? This secondary gap, but with a failure of one of this side, the expectation is that price is seeking lower. However, what we now need to remember is that this gap has been inverted, all right? So we expect this to offer resistance, and above us, we now have this bearish gap as well, all right? Now, remembering, guys, this is on a daily scale. So it depends how you're positioning yourselves, what you're doing, not suggesting, oh, okay, price is definitely going to rip up to here, but it looks like a good draw on liquidity. Price very rarely moves to these targets straight away. I'm just going to move this back because I think we're going to look at that on the 4 hour. But, it makes sense to me that price would do something like this. What does price do here? Takes external liquidity from these highs, comes and rebalances this fair value gap here and holds it. What does it then do? Takes external liquidity from this high as well as the highs highlighted here. The plan was then for price to find support here and move higher, but it didn't. It closed below. So now we're looking for the opposite, right? Price very rarely moves to these in a linear fashion. We're now looking for it to draw up into this gap and then make a move on the liquidity lower down. Okay, now it doesn't have to do that. Price could just drop like a stone from here, but if it does, then we have a plan, right? And that's why we move to our kind of secondary phase system. Now I'm going to look at the 4 hour before we look at the 15 minute, all right? And that must have been on the weekly. And that's already been taken, right? Sorry, so that intermediate term low there. So that's now invalid. However, these key lows on the higher time frame, again, you can see how they provide, support. This is people either taking profit or entering, on limit orders, but the weight of the market was too heavy and it kind of pulled that down. So from here, that doesn't look to be valid now. What we were looking for here was this expansion leg lower and seeing price draw back towards the 50% here, right? Which is a good example of why price, if it's particularly heavy, doesn't do that. So again, what do we do if that happens? Well, quite simply, we have a plan in place. Remember what we just looked at on the 15 minute, for example. So while we're here, and I say, okay, well, if price is drawing back towards this fair value gap here, We can see the 4-hour gap overlays with it here. Again, previous T8, we've been looking for this to offer support. It did initially close below. What does price then do? We violated this, making it an inversion, meaning that if we failed with internal liquidity, we then expect external liquidity to be met, and we came down here and took these relative equal lows. So if price is drawing up to this, then on a 4-hour scale, we've seen a local sweep, right? And actually, they're not really equal lows because that one had already taken liquidity, but we've seen the sweep here, the inducement. We're now looking for price to travel back here. If we want to use our 50%, we can see that price could be drawing up a little bit higher here. So now as we go down to, say, a 15-minute, you're welcome, Ship City. I hope it was helpful, mate. While we draw down to the 15-minute, we're saying the same kind of thing, right? Which is, okay, if price is now drawing up towards this, we can see the 50% line. Where could price be heading to? And there's nothing clear and obvious here for me, right? I'm not looking at that thinking like, well, it's obvious where price is heading for here, other than this consolidation here, which was mostly Asia's range, right, from Tuesday, to have this really, really big sell-off. One thing I'd certainly be cautious of today is the fact that we've swept Asia's high. So if we do really look to kind of break down here, right, then I think I'd be saying to myself, all right, maybe this thing is actually too heavy and we're looking to correct lower, So we could look at something like this, for example, this gap, or you could be looking at these lows. I think I would want to see a bullish reaction sweeping these lows, So for price to come down, show some momentum to get above. Or I think if we start closing below these levels, then price is going to be seeking liquidity lower. And we can see the speed of this move higher, quite gappy, quite thin, meaning that these can be filled in quite quickly, right? Sharp move down, sharp move back up. So that's what I would be watching for there, certainly on BNB. And then let's take a look at Pepe. Let's go over our old friends at Binance. Right, let's see what we've got here. Okay, so Pepe obviously just been a beast, hasn't it? It's been a real meme-driven narrative for this kind of crypto market. Very, very different to kind of previous cycles. Now, we're holding this. So as long as we hold this on a weekly scale, quite simply, I am bullish. You're very welcome. As always, Erica. Very bullish as long as we're holding this in the same vein that, when price was correcting down here, this started to sell off, started to show weakness. People were thinking this going to zero. When you've got gaps like this, right, the market loves to be efficient. So when you're taking liquidity from highs, price is typically only looking to do one of a few things, which is either take liquidity from an old high or an old low, or rebalance an inefficiency, which is these fair value gaps here. Now, obviously that's really simple on a weekly scale. So let's get a touch more granularity. And I really like this, right? I really like this because it gives me a clear and simple plan, right? Daily fair value gap. We're holding that, remaining bullish until we close below. Simple as that, right? But the counter to that is that we also have this bearish gap above us. And what I'm going to do is, just to make this stand out a little bit more, I'm going to do this one in red, and then we'll do this one down here in green. So you can see how price is kind of wedging itself in this little range at the moment, and daily it's just kind of ping-ponging up between the two. So while it's doing this, then I'm still going to say, okay, well, let's look at the leg down. And we can see we're now up in the upper 50%. While we're in the upper 50% and we're delivering from this bearish gap, then I'm bearish, right? While we're in the lower 50% of that and we're holding this bullish fair value gap, then I'd be looking bullishly. This is talking about intraday as well, guys, all right? So just to give that some clarity. Now, what would I want to see here? Well, quite simply, I want to see things that align with what I'm talking about on the daily. So, for example, the fact that we're delivering from a bearish gap on the daily, and we're delivering here from a bearish gap on the H4, the 4-hour, gives me a lot of conviction that price could be going lower, right? So how would I frame that? Well, quite simply, on the 15-minute, I would want to see a violation here. And we just recently had one. We had this nice expansion here during the London session, all right? And now in between sessions, unfortunately, we've had this violation here. So I'm looking at this gap here. Why this one? Because at the moment, Sambuca 77. Hello, mate. It is good to see you. I hope you've been keeping well. At the moment, look, this has offered support here and here. Now we're in this. Simply for me, on a 15-minute scale, if we close below this, it allows me to then flip this to an inversion. While this holds as support, though, by the way, you know, this is kind of supporting the fact that price could go higher. But let's look. Remember our higher time frame. Daily bearish fair value gap, 4-hour bearish fair value gap. What have we done here? Well, we've left this higher and we've failure swing this higher, meaning we've set a lower higher. A move below this low would confirm a lower low. So therefore, we also have market structure on our side to think, okay, if we get that close below into here, then why wouldn't we target a deeper correction down into here? Now, I'd be very cautious at the moment. I'm not just talking about today, all right? I'm not really openly, actively trading FOMC days. You know, when we have CPI and you lead that through, you have FOMC in the afternoon. Really good days to kind of tape read and to take a look at the markets and how they kind of get affected. Beard, mate. Yeah, of course. Why not? We can finish up on Sol for you. No problem. So while this holds, you know, you would favor intraday longs, although I would still like to see something a little bit deeper, but still happy to take that. That would be my kind of first target. The other thing I would say is, you know, if you're intraday traders, this is going to, you know, be screaming liquidity down here, right? So looking for breakdowns below here and then conviction plays into this and potentially lower as well. We've obviously had a pretty fast move up here in this V-shaped recovery. Again, if we've swept liquidity above Asia's high here and we've moved into higher time frame bearish gaps, then my expectation is for price to move a little bit lower. But as long as we hold this, we have a point of invalidation, and that's how I would look to play it. So, Sol, let's have a look. Start with a nice clean chart. Okay, so Sol's an interesting one here because we had this bearish gap that was violated, right? So bearish gap closed above, in which case it then becomes an inversion. Now, this one actually failed. Price closed above. Now, when you're dealing on a higher time frame, it didn't really fail because when it closed above, it set a weekly high. The expectation as a minimum is that price is then going to come and take that prior week's high. It would be the same on a daily, okay? However, for me, I still expect price to move typically to swing highs, all right? So it did fail in that respect. Now, when price then came and it's looking like kind of closing below this now, I'm not so interested in this here. There's a slither of a gap that joins both of them, which is this, right? Now, at the moment, this is a bullish gap. But the fact that it runs a bearish gap here as well means that this makes it a balanced price range. Now, this would be expected to offer very strong support and will be seen in a lighter shade of purple on my charts, okay? Now, price looks pretty hell-bent on closing below this. Now, if it does, then my conviction is that price is seeking liquidity lower, and that's the next obvious point of liquidity on a weekly scale. That's at 137.97, okay? So to give this a bit more granularity, let's look at it on the daily. We're seeing a similar kind of situation unfold here, where actually price is being held quite nicely at the moment and just within this bullish gap, okay? So while the bodies are respecting this, then I think, you know, we make a move higher towards this or potentially even to this upper gap. All right, but I would favor bounce longs at the moment on an intraday basis here on the daily. So Beard makes a point here, looking for 140 to 141 to play out a flag on the daily. Okay, 140 to 141. So, okay, 140 to 141. So down this kind of region here. So maybe looking for a sweep of this low here. Slightly less obvious, but absolutely can understand that. You've got a daily swing low down there as well. I think, you know, you could technically see a wick down into this. If we saw a really strong move down today, obviously we've got a big news driven day, price comes up and corrects back into here. If it did that and held that, I'd consider that pretty bullish. All right, any close below here, then the expectation is absolutely for price to come to 141.32. then to 13797. Below that, then we have these. I mean, there's not much point at the moment looking directly below that, but that's certainly what I would be thinking of. Popping it down more granular, then this for me is quite simply that's what's capping the market at the moment, is this gap. All right, so while we're still within this, we've got a bearish gap here. Now, we close above this on a 4-hour scale, then all of a sudden you can say to yourself, okay, well, you've got this gap here. And again, gaps, we're looking at them to be draws on liquidity like magnets, but price is typically hunting for liquidity above highs and lows, right? So we don't see a rejection in here. The idea is we would close above here, take some intraday positions up to around here. We don't know what price is going to do here, because this could be a really great place for the price to just dump to here, go to there, and then make a move lower. We don't know if it's going to do that or not, and we're certainly not going to have, or it's unlikely we get a kind of confirmed structure shift in that point as well. So for me, I think, we need to be cautious while we're delivering from this gap, but a 4-hour close above this, confirming that we're still in the daily gap, and I think we really could be looking to push higher from here. On a 15-minute scale, if we are going to push higher, then quite simply, you want to see price hold this gap here. All right. Hold this gap here, and I fancy price to make a move higher. However, I do think what is interesting is if we look here, where have we got? What is it? 5 o'clock, isn't it? What was opening price at 5 a.m. was 14977. This is New York midnight price. While we're above this, actually, if we close below this here and violate it, as in we invalidate it and we make it an inversion, then swing low, swing low, swing low, swing low, gaps down here become very, very attractive targets, all right? Because when we look at this dotted line here, and especially if we look to the New York session, although remember, guys, a lot of this is a little bit hypothetical today, purely on the basis of the news that's about to print. We have CPI coming in under an hour, and then we have FOMC later, so there could be a lot of volatility today. They are typically treacherous and difficult conditions to trade, so do please be aware of that if you're deploying any leverage, or if you have anything, any big positions or that. Just remember to manage your risk properly. I would say always manage your risk properly, but especially on days like today, because they can be ones that really, really kind of damage your P&L, come the end of the week, come the end of the month, all right? So just to finish up quickly, let's take a look at the economic calendar, just so I can show you guys what's going on here and what I'm blabbering on about. So we can see up here, all right, Wednesday, 12th of June, which is today. This is what we're going on about here. So 1:30 my time, which is 12:30 UTC, which is in about 50 minutes from now. We have core CPI, CPI month on month, and CPI year on year, right? Here's the forecasts. This is what the previous was. These have real key abilities to move markets, so be aware of that. But this, obviously, later on for everyone, you'll see all the all the brilliant memes and bits and pieces hitting there for Chairman Powell as he comes out, and basically the funds rate decision is going to be massive. So are they going to cut? Are they going to hold? Are they going to hike? The money is hugely behind that they're going to stick, so keep rates the same. But remember, ECB, so the European Union, have cut rates in the last, in the last week or so. So, the US don't typically follow what Europe do, but it does go to show that if you look at the figures from the US, from Europe, from the UK, the inflation, they have started to have an effect on inflation, right? Inflation has been coming down quite dramatically. It means interest rates should start to follow. And naturally, when that happens, we then move to a more risk-on environment, right? Which is good for crypto and also good for equity markets as well. So do keep an eye on that. They obviously are a little bit further apart in terms of my time, London time. CPI, we've got a 1:30 p.m., which is 12:30 UTC. And the FOMC, the funds rate, is at 7 p.m. my time, which is 6 p.m. UTC, or 1800. And then remember, you've got the FOMC press conference starting 30 minutes after that. All right, guys. Look, wishing you all a fantastic week ahead. Please do come and check out the stuff we've got in the description. You can come and trade with us over at the Bird Nest, where we've got education, all kinds of goodies. You can also find out about Femex and our partners, Binance, Bybit, for example, down there, and get some good deals if you want to go and join those exchanges. Have a fantastic week ahead. Do trade safe. And I do look forward to seeing you all